We're running a little behind schedule, and hopefully we will try and wrap this up in about 35 odd minutes. This is going to be an interesting conversation in terms of how do we see the GP LP roles evolve, particularly as private equity continues to be the largest and the most prominent asset base and asset to invest behind. So I will not really introduce Anita and Renuka. I think everybody knows them and they really don't need any introductions. So, if you read the Forbes quote of the day, it actually says, luck is in catching the wave, but then you've got to ride it. And I think nothing better than that in today's context in terms of how we're seeing companies evolve, how we're seeing private equity evolve, how are we seeing the opportunities behind various sectors to invest behind. So I think we will straight away delve into, from both your perspectives, and first you, Anita, in terms of how you're seeing the landscape, how do you see the current environment, and again, from an investing lens perspective, how are you seeing the whole market evolve?
Thanks, Vishal, and it's really a pleasure and honor to be on the stage with Renuka and Vishal. Thank you. For us, of course, I'm looking at it from a global perspective, and I was happy to catch the lag end of the previous panel, which spoke about India in the global context. So I won't repeat what was said, but as a global fund manager of pensions from the province of Quebec, our goal is really to look at where we can make sustainable returns for our ultimate clients, which are the pensioners of the province of Quebec. Just to put things in context, one often thinks of pension funds as having a lot of capital and ready to make investments. But I'll share a story of riding in a cab in Montreal. And the cab driver asked me if I was there on holiday or work. I said work, and he asked me where I work, so I said CDPQ. And he said, oh, that's who handles my pension. And I said, yes, that's right. And then he asked me where my office is, and I said in India. And he actually stopped the cab, turned around, looked at me and said, what are you doing with my money in India? And actually that kind of brings home to an investor like CDPQ that we are investing the funds of, average citizens in a province of Canada. So with that backdrop, when we look globally, our ambition is really to go where there are higher yields and returns than what we see in the home market. But having said that, sustainability and really the sort of making sure that we are not going to lose money is writ large in terms of our objectives. So when we look at India in the context of a very turbulent world, as was just described in the previous panel, is a bright splash. And there is, as you've seen from a lot of the Canadian pension funds as well as investment funds, quite a bit of appetite for India. And it's not just in terms of the fact that there's high growth, but somehow a deep conviction that there is the fundamentals in India are right. The entrepreneurship, the demographics, the ability to create value in India in different sectors has been demonstrated. So from a global perspective, close to $600 billion came towards private equity funds all over. And private equity as an asset class is one that CDPQ in particular has actually depended on for a long time, especially as we ventured into new countries and new sectors, because that was a good way with local partners or global partners who have done this for a long time to step into areas. And this is keeping in mind that we want to make sure that while we go after higher yields, we also have sustainable returns over a very long period. So let me stop there and
Thanks,
come
Renuka.
back to you.
Renuka, from your lens, I know you've been looking for the right assets. You have already invested a lot. How are you seeing the current situation?
So, the good news for the private equity industry, Vishal, is that the entire application of the product has really widened. I've been in this industry from late 90s. At that time, it was much more just growth capital into young companies, preferably young companies.
Yeah, yeah.
From there, I think the industry has matured now to provide capital in a very wide basket of opportunities, starting from investing in startups to providing money for M&A financing, to buying large chunks of shareholders, to set companies where shareholders are fighting or shareholders have diverging objectives, not to lose value and get distracted, to investing in distressed assets. The application of the product has also evolved from being a pure equity into mezzanine structures, into, fairly interesting financial structures to take care of the risks and create appropriate balance sheet, I would say, for the appropriate opportunity. So that's most encouraging, that there is liability side. I mean, institutions like CDPQ providing the long-term, stable, high-quality capital.
Yep.
And on the issuing side, people using this product with a very high degree of flexibility.
So you
that
continue to be excited about the opportunity that you're seeing in the landscape in terms of various sectors, and I'll come to the GP-LP relationship, but
Yeah.
in terms of, the deployment of the funds itself, in terms of the sectors that you're seeing as growth opportunities within the country right now.
No, I'm super excited, and I'll tell you why. Because, see, in India, there were only two streams of capital providers. One was commercial banks, who were largely lenders.
Yeah.
But in the early stages of development post-independence, banks also operated as venture capitalists.
Yeah.
But with increasing tightening of regulations by central bank, which is only appropriate because banks deal with depositors' money, they continuously narrow focused the banks and said, please only do commercial banking activity. And if you're doing anything beyond commercial banking, it has to be severely restricted in terms of 5% of capital or 10% of capital and so on.
Yeah.
So,
Yeah.
so that's one traditional source of capital. The other traditional source of capital was capital markets. So I started my career with, as an investment banker. And in late 80s, I have taken companies public who were raising 30 crores and 40 crores through a public issue.
Yeah.
And the market caps of these companies would have been sub 100 crores. Now that's all history. Right?
Correct.
So today you have, pardon my saying this, but a fractured banking system and highly mature capital markets where players in the capital markets are very demanding in terms of regular information, reliable information, and a significant float for them to be able to invest in liquid shares. So that leaves a very, very big ground open for VCP, mezzanine, whatever player that you may say. And then when you put the backdrop of 6 to 7% growth that we want to see, and you lay on top of it growth coming from emerging sectors, whether it is technology, financial inclusion, telecom, these are not traditional, sectors like a typical brick and mortar sector. There's a lot of knowledge companies like in healthcare, that you are seeing. Private equity, venture capital, I mean, whatever you call it as the alternate asset,
Correct.
has a very wide bouquet of, choices to kind of invest in.
Superb. So I'll now come to, the crux of our conversation, which is the maturity and the evolution of the GP-LP relationship. And it is, this is a relationship which has evolved over the years, continues to evolve. coming at the back, or particularly from a large LP perspective, Anita, when there was, capital markets were not all that mature. All of a sudden, stock markets around the world are gaining a lot of momentum, particularly from an India perspective, to a stable stock market, opportunity to invest behind that, large M&As as big possibilities, and then to choose to put your capital behind a bunch of GPs. How are you seeing the whole relationship evolve, and how are you seeing the maturity of this relationship? From an LP perspective, and then obviously from your perspective in terms of how you are seeing from your lens the maturity involved in terms of in knocking on the doors of LPs and working with them. So Anita, first, your perspective.
Thank you. I think we have seen a large evolution in the sense that there have been now, I believe, globally something like 2,500 funds. And in India in particular, you see every few days a new fund coming up. So in terms of choices, we are spoiled for choice, I would say. However, having said that, traditionally CDPQ has been very conservative, again, balancing the sort of risk-return ideal profile that we look for, and therefore had stuck typically to global funds that were raising large sums of capital in the $13-15 billion type of range, and have had very good experience having invested with those funds. But I think as we kind of see the markets, particularly in the developed world, where there is volatility, there is cyclicality, and we see the emerging markets, or as we in CDPQ call the growth markets, really providing opportunities. As recent as, I would say, maybe 3 or 4 years ago, we've started looking very seriously at funds like local funds in India, India-only funds focusing on India, similarly in China, in Mexico, in Brazil. And we've had good experiences in the early foray working with these funds. What, of course, for us is a big challenge is size. Our minimum ticket size is anywhere, our sweet spot, I would say, is $200 million. And typically, the opportunities we find are, at best, 100 million. So we've taken to, with funds that we're very comfortable with, where we see a long-term partnership that will go beyond just one fund. We would maybe have a managed account that works simultaneously. There are funds who are very particular about who they manage accounts for. There are others who, to bring you in as an LP, are willing to provide that concession because they understand that we have a size issue. We also have stayed away from very focused funds. For example, we don't do funds in infrastructure.
Okay.
So we found that from our experience, direct investment in infrastructure has worked better for us than going through funds. However, in many consumer-driven, technology-driven, healthcare, these kind of sectors, we found that funds have actually been able to build the expertise and provide the kind of returns that we're looking for. A third aspect I would say is that because we are long-term, we would like opportunities also from our fund investee companies to see the possibility of a direct investment going forward, even to the extent at times of providing an exit for the fund itself. So some interesting structures have come out where we, in fact, have played that role as well.
So, and I'll take you on that whole piece of, when you see so many funds coming to you, the criteria that you're currently using in terms of where you need to go and park your capital. Renuka, from your perspective, how you're seeing the relationship evolve, and from the LP-GP relationship, and how are you finding both challenges and opportunities evolve in that relationship.
So, picking up from what Anita said, that in large institutions like CDPQ have gotten comfortable over a long period of time to invest with country-specific funds like India. It's been a big blessing for players like multiples. So, when I started this private equity investing career with ICICI Venture in late 90s, it was an impossible task to get such large institutions to commit capital to an ICICI Venture fund, because even if they decided to come to Asia, it would be to invest with more Pan-Asian funds rather than country-specific funds, because we were too shallow, too volatile, and too insignificant for them to take that kind of risk. So I think that we have a lot to be grateful for all the good things that have happened in the Indian economy, that it has become of size, scale, and acceptability perspective, that it is attracting this capital. I think I am a very, very big believer that to build any company, when you invest, you are partnering with the company to build value together. You have to be a very stable investor, and you have to carry a set of values consistently over long periods of time to create value. If you have an unstable capital provider to you, you cannot carry stability. You can only give what you have. So these institutions who are now backing Indian players have brought huge stability, credibility, and best practices in our business for us to be able to onward carry it to our portfolio companies, and also create very stable platform. So this relationship is a very long-term relationship. I don't look at it as a fund relationship. Fund is just a metaphor. It's just a vehicle through which you are engaging in a very long-term partnership, where you're moving from one fund to the other, and you're never solving for the problem of raising fund 1 or fund 2. So when you have such a long-term perspective to your relationship, then you invest a lot in terms of how do you build trust, how transparent you want to be, how much of the information about your portfolio companies, how frequently and reliably you want to share with them. And in our business now, since, as she said, it's a global money, you're bringing the money of taxi drivers, nurses and doctors, engineers working in factories, to India. There is a lot of obligation that they have to their contributors, which therefore gets passed on to you, and therefore you build very, very sound back-end system to gather information from your portfolio companies, and then become very responsible. So, Anita touched on something which is very emotionally connected to me as well. So I was doing once a offsite of all my companies where we had controlling stake. This was in my ICICI Venture avatar. And to just set the context to my entrepreneurs, I told them that before you start visioning your company and making all these grandeur plans, first become aware that you are invested by funds who are managing this kind of money, the taxi drivers and the healthcare workers from the rest of the world. And for a moment, you think that your pension is with a Brazilian fund manager who is investing in Brazilian companies, the way I have invested with you, and this is your pension money, and how are you going to feel about it? I mean, you could see that stunning silence in the room. Suddenly, the reality was dawned on what is the kind of responsibility you have. So when we get money, we suddenly think that all our problems are over and now we can have maja masti, and that is absolutely, far from the truth. So I think that in focusing us to follow what we call as the International Limited Partners, Association guidelines and so on, the overall quality of the private equity industry and the engagement with portfolio companies, according to me, has gone through a very significant,
Maturity.
kind of maturity. The second thing is that, I have personally been a very big beneficiary in multiples of highly encouraging and supporting LPs who are also equally demanding. So it's a superb balance of demanding great performance, great governance, and so on. At the same time, encouraging you to do the right thing and don't do shortcuts, don't, spoil the game for your entrepreneur, don't embrace bad practices just to make a little extra buck. So it's a fantastic balance of, demanding performance and giving stability.
So stay there, Renuka, because I want to ask Anita that, and I'm sure in the room here, there are a lot of budding fund managers, right? Those who are going into the market, wanting to raise the fund for the first time. Many of them have come from, backgrounds in large private equity funds and are now in the market looking to set up a fund for themselves. And you talked about the fact that, 2,500 people. How do you really go out there and choose your next GP, right? And so what are you really looking for? Because I'm sure that, from an LP perspective, and coming back to what Anita said, governance, demand around the growth of the companies, IRRs, everybody believes that you show a couple of good results of a few companies and then you're all sorted out, but it doesn't really seem to be all that, right? So what are you really looking for, Anita?
Thank you. So I think team and track record are the two things we look for. And I have to say to the budding fund managers, keep at it, because probably someone like us would invest in Fund 2 or maybe even Fund 3. And there's a reason for that. Basically, one is, of course, size, because a lot of new funds start small, and the ticket sizes for an LP like us would be too small. The second is, again, coming back to our sustainable investment format, we are looking for track record for sure. Something we look at is teams working together, and we've seen that that makes a real big difference in terms of how long have teams been together, how have they worked together, because even if you bring in very brilliant people with amazing backgrounds who've managed billions of dollars, when you put the team together as a group, whether it ticks or not is something to be seen.
Yeah.
I have to say that we have actually, Renuka, really focused in the past on the large global funds, and at best have done Asia, Pan-Asia funds with an allocation for India. But I'm very happy to say that we have a team seriously looking at India-only funds, investing their time and effort to understand the market. And if you ask me, the two things that really tick the box for us are team and track record.
So let's come to the holy grail of it all, right? So in the LP-GP relationship, co-investing, direct investing, right? All of a sudden, you're probably competing with a whole bunch of your GPs for the same assets. How does this play out? And where do you see this going, right? Because your teams are now you're putting together your own teams, and those teams are probably looking at high value, high quality, good assets. How will you distinguish between what you will prefer to do through your GPs and what would you prefer to do as direct investment? So, from your perspective.
I think we would continue to do both, because I think the value that GPs do bring to us, as I mentioned earlier, in countries where we are new, in sectors where we haven't done direct investments, I think in those sectors we would definitely continue to invest through GPs. However, having said that, as we've set up base and as we see opportunities, very often we are actually providing exits for funds that have invested in companies through our direct investment. So to date, I haven't really seen that much of competition between ourselves and our direct investments vis-a-vis private equity funds. However, where I have seen that is in terms of the funds that do bigger ticket sizes, so especially the global funds. And sometimes we decide to work alongside them, sometimes we are in competition. I think there's enough to be done that I don't see it as really.
So let's ask Renuka whether she
handicap.
thinks she sometimes gets into a situation where she's competing with her own LPs for the same asset.
So I see that we are competing, probably our LPs are coming through their other relationships as well.
Yeah.
But I would say, Vishal, that over the years I've also trained myself to not think of these as competition, because nobody is going to leave the ground completely free for us to play. So unless you bring a distinctive competence, I mean, Anita has emphasized this morning so many times that certain areas like healthcare or IT or whatever, they count on their local partners, because probably there is much more handholding required, much more interaction with the company, which may be too expensive for them to do. So there are certain opportunities where local players like us add value to our LPs, which will always be available. And the challenge for players like multiples is, how do you constantly be at the leading edge of a bunch of things that you can do, which is uniquely superior to what your other competition can do, and one of your competition can also be LP. At the end of the day, I think of it as there are so many players you are competing with. Sometimes you also compete with your LP's capital. If that's what they determine as the best, because the amount of money my LPs also have to deploy is so humongous that for them to depend only on one or two relationships that they will have in India, they may miss out on a whole bunch of opportunities. So we have to be at the leading edge of whatever we do, and have to continuously prove to our LPs that you can make a difference. Otherwise, you don't deserve their capital.
Their capital, absolutely. And Anita, also from the perspective of, there are a lot of funds who are coming to their 10th anniversary, and I guess at that point in time, one begins to see, how have the last 10 years been with a particular GP? How do you want to do some reallocation? So are you finding that, because of obviously the number of choices that are there in front of you now, that those funds which are now coming to a close, you want to relook at your entire allocation, or you're very happy with the way that a lot of your fund deployment has happened in terms of the current GP partnerships?
So I would say we have a stable set of old relationships that we've continued, particularly the global funds, and those have done well. Again, we look at it from a long-term partnership point of view, just as we do in our direct investments. So to that extent, there are cyclicalities, and there are times when all funds have done much worse than expected. And so you sort of ride that through and don't switch your horse midstream, so to say. However, in terms of the new funds that we are investing in, and we still have a lot of appetite, both globally as well as regionally and country-specific funds, we are looking very carefully in terms of how funds have performed and where they are sort of refocusing their energies. One thing that has intrigued us is a thread that we see, and Renuka had mentioned it also to me earlier, of bringing in operating partners as well as investment teams. And this seems to be a new trend, particularly in buyout funds, where you're actually going in and trying to sort of add value as soon as you've made the investment, and therefore create higher returns for the fund and for the LPs.
thank you very much. It's a pleasure to be here with both of you. Thanks.
Vishal, I just want to say that all your questions were like a private equity veteran. I don't believe that, you have less than half a decade in the industry. Fantastic.
Thank you, Vishal.